Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hello everyone, checking in on the tech sector. So no follow through from the bulls buying the dip yesterday, and an inside bar candlestick showing the tightening range reaching an equilibrium after all of that volatility. So look at the volume. The volume is very notable because it's the same amount of volume as yesterday, actually a little bit more. But yesterday's volume was a lot of bear volume and then a lot of bull volume on buying the dip. The candlestick today didn't really have a ton of bull action. I would certainly say it was more bearish than bullish. So that has to be attributed there to a lot of bear action. So the 50-day moving average support is a key level to be watching. It's at 52.38, but the level is 52.33. That's the double low of consolidation at this point, and we are seeing weakness. So as long as the bears maintain control here, and in terms of control, I'd be looking as long as this middle Bollinger Band is resistant, the bears are certainly in control of the short term. So if we break this 52.33 double low, we're going to be looking down at the next level after that, down here at 52.07 and 51.97, and that's going to shift the momentum and shift the trend. You can see the Bollinger Bands are already beginning to widen out as we have held the Bollinger Band, the lower Bollinger Band support a couple times, but that's going to continually drop to lower and lower levels. The weekly time frame for XLK is the second red week in a row for the first time since the election. We're losing the 4-period exponential for the first time, and we are on the verge of losing the 8-period 52.56. If we close tomorrow below that level, we lose exponential support. We look for a bearish TCG cross and a bearish MACD cross to potentially play out, and we look for, again, normal healthy consolidation. We have not seen any real consolidation since the election. We could pull all the way back to $50 and still be extremely healthy on the weekly time frame. Apple was a little bit more bullish, inside candlestick as well. We'll be watching this middle Bollinger Band. I do expect to reject from the middle Bollinger Band resistance on the first back test. That's going to be at about 142.40 to start tomorrow. We'll have to update that level, but we have the bear TCG cross for the first time since the election. We have the bears with a bit of momentum, and as long as that middle Bollinger Band is resistance, we will be looking for further downside. So that is the level for the bulls to close back above. Support is 141.01 and 140.06. And again, the bulls did show up a little bit more than the tech sector as a whole and as stronger than Facebook as well. But the weekly time frame is confirming the bearish reversal inverted hammer from last week. The bulls are buying a bit of the dip, so it's not an all-out dump. We do still have the potential for the bulls to close above 141.87 to keep the 4-period exponential support as it has been support for the past 4 months. But if we do close below that level, we'll start to see the potential bearish MACD cross, and we'll start to see the same kind of signals that we're seeing on XLK. As of right now, out of these 3 names, Apple does still have the most bullish weekly chart. Facebook, a weaker close more significantly than Apple. You can see we closed near the low of the day. Still an inside bar, but we're looking down at 139.44 and 138.81 as 2 support levels. The exponential resistances are driving the price to the downside. Bearish TCG cross of the 4-period over the 8-period to the downside, and we're looking down at 138.81, the low of the week, as a key support level. Confirming the bearish reversal candlestick for the first time in 2017, losing the 4-period exponential for the first time, and testing the 8-period exponential of 138.51. So you can see how similar all 3 of these names are in the sector. They're pretty much all going through the same thing to varying degrees. And I would say Apple is the strongest on the weekly, and I would say XLK is the weakest, and Facebook is in the middle here. So tomorrow's going to be a pretty important day to see where we close relative to these exponential weekly supports, but we will be looking at the bears in control of the short term as we head into next week. I appreciate you watching, and we will see you over the long weekend.